Welcome everyone, welcome. We'll get started shortly, welcome.
Hey, David.
Hey Bill, welcome, how are you?
I'm good. I got my AnyDesk all installed on my new computer.
Awesome.
All set.
Hey Cam, how are you?
Hey David, how's it going?
Good. Hey Soli, welcome.
Thank you very much.
Welcome. We'll get started shortly, guys. Welcome. Hey Juan, welcome Juan. Welcome guys. We'll get started shortly. Welcome Daniel, welcome guys. We'll get started shortly. Welcome Peter, welcome.
Thank you, David. How are you?
Good. We'll get started shortly.
better tomorrow, we're making a bold new energy.
All right, guys, let's go ahead and get started. We've got a lot to go over this evening. For those of you who are new, you should see on the screen there the 4 market phases that every trader must know. So I recommend taking a picture of that and having it laminated. So again, the 4 market phases that everyone must know. Okay, so take a picture of that, guys. Have it laminated, okay, so that you have it, especially the new folks that are with us. All right. So again, go ahead and take a picture of that. This is what we follow, right? So it's basically the 4 cycles, right? 4 phases that every trade must go through. Okay. All right. So
Is that for stocks or for Forex?
so it's for everything, Solly.
Okay, thank you.
Yeah. So yeah, go ahead and take a picture of that. That will help you a lot. All right. So we have accumulation. So on the left, the accumulation, right? So accumulation, then price breaks resistance and gets us into the advancing stage, advancing or markup phase, advancing or markup. Then distribution, that's usually at the top of the cycle. All right, distribution. All right, and then declining or markdown phase. And then it starts all over again. All right, so accumulation, advancing or markup, distribution, declining, so price is going down, declining or marked down, and then it starts all over again with accumulation. So take a picture of that. I would recommend having it laminated so that you have it always. All right, so we'll go ahead and get started here, guys. As you know, this evening is all about cryptos and Forex. All right, cryptos and Forex. So you guys should see my screen here. So the market's just open in TradeStation here. So the market's just open. This is Bitcoin. So as you guys know, Bitcoin is in the what phase? What phase is Bitcoin in?
Markdown.
Markdown phase. Okay, so markdown phase. So we should not be in, as far as we are concerned, we shouldn't be trading Bitcoin right now. Okay, so it's in the markdown phase. All right, 1 second here. 1 second here. All right. So right now, Bitcoin is at 47,000 and change right now. All right. As you guys know, we follow Bitcoin because Bitcoin is the barometer for the entire crypto market. So you will notice when Bitcoin is going down, most of your cryptos out there will go down. When Bitcoin is going up, most of your cryptos out there, large percentage will also go up. Okay, so you don't have to trade Bitcoin, but we need to track Bitcoin so that we know how to trade the other cryptocurrencies that are out there. All right, so it's very, very important, guys, that we monitor what Bitcoin is doing. So right now, it's in the declining phase, markdown phase. We don't have any support and resistance. Okay, so no support and resistance lines like here. So no support lines. So the price can definitely go lower. Okay, because right now we have no support in the current price. Now we do have support right here, this line right here. So, and then 40,000 is the next big support. So 40,000 is the next big support. And the next big support is about 30,000 right here. All right. So I tell you, Bitcoin looks pretty good to get to if the price holds, the selling holds like this, 40,000 is not too far. All right. And then if it doesn't hold here, guys, if it doesn't hold support here, then 30,000 right here would be the next area here. So we're seeing somewhat of the same price action right here. Okay, so here was this buy signal here, got a sell signal here. This kind of looks almost similar right here. Okay, so we could see Bitcoin test these areas in here. All right, so keep an eye on Bitcoin. Let's take a look at for Forex. Let's take a look at the dollar. Okay, so just like Bitcoin is the barometer for cryptos, okay, the dollar index is the barometer for the entire Forex market. Okay, so what we're starting to see is that the dollar index is pulling up. All right, so it's really looking to get this to this resistance area here. Okay, and we'll see that reflect in the pairs, in the Forex pairs. Stop me if you guys have any questions as I go through this. Okay, all right, so good price action on the dollar index, good price action. If we can get up into this area in here, that would be great, and hopefully break through that resistance area in here for the dollar. Okay, let's take a look at the Forex pairs. All right, so the Forex pairs, let's see here. USD-TRY is still the top pair here. Kim, you still in this pair?
Elaine just calculated a few minutes ago how much I'm up. Pretty astounding number.
I'm so proud of you. I'm so proud of you for holding this trade. You know, and this is just an amazing trade on USD-TRY. So it's holding. That's got to be what is that? A little over, that's a month and a half, almost a month and a half, is it?
Yeah, my entry was on 11/15.
11/15. So right in here. Just a great move. Good job holding on to that. Hey, Brian, welcome. Just a great job. So your trade here, this will look, USD-TRY will look to test this. It looks really good to test this resistance here, right? It looks really good to test this resistance here and move higher. Just a great trade, an amazing trade here. Good job. The second top here is EUR-TRY. So EUR-TRY, very similar to USD-TRY, but it retraced a bit, kind of broke here, got a sell signal, and then broke resistance and give another buy signal here. So basically the same trade. The only difference is that it gave a sell signal and then we re-entered here. So it will look to test resistance here also. All right. The thing that I'm watching right now with Forex, guys, is right here. We have a lot of pairs that are consolidating. All right, a lot of pairs that are consolidating. So we just want to be careful. We should not be in any of these pairs here. Like I said, USD-TRY and EUR-TRY, that's your money making pairs there. Those are your pairs.
I have a question when you have a chance.
Yeah, Daniel, go ahead.
Why is the Turkish currency doing so good? Is there something going on there maybe that, you know, could cause it, you know, I guess for you to make your profits?
That's a good question.
I can answer that if you want, but go ahead.
Yeah, go ahead, Kim, go ahead.
Yeah, their economy is very weak right now, and they're still suffering a lot of aftermath from the refugees from Syria, and two, with the situation in with Russia and Ukraine, everyone knows that Erdogan, he's the president of Turkey. Him and Putin are allies, and they're thinking that if all those that troop buildup on the Ukrainian border with Russia, if they take over another portion of Ukraine like they did Crimea, then that's going to I think put a lot of pressure on their currency. So I think that's what's going on right now. And still, you got to remember, and in Syria, you still have that huge refugee camp that's right on the border of Turkey as well too, and that's causing a huge impact on their economy, trying to take care of all those refugees.
But do we really care?
Oh, thank you.
No, the charts was better.
Yeah, I mean,
Hey,
that,
Dave,
go
can you
ahead.
put up another one? If you're finished with that one, I was looking to get out of that one we talked about last week with the USD SEK.
Okay,
And I know that one's in no man's land, but I'm actually at a little bit of a profit from that one.
okay.
You told me to get out of it, and I was down just a little bit, and I was like, well, if I sell it, I'm losing, but I'm not that far. I'm in no man's land where we don't really have a strong sell signal. It's USD SEK.
Okay, we'll take a look at it in a minute. But I wanted to answer, I want to piggyback on Daniel's question. So Daniel, what we want to do is, and Kim give a good synopsis on the data. Quite honestly, I don't know. I'm glad that Kim knew, but I don't know. I really don't pay attention to the news too much. If you guys are really good at the news, and the news support the price action, which is basically what Kim was going through. Okay, so the news, in this case, the news supports the price action. So we always want to trade the price, right? So this this is the price. This is the price, right? So we never want to trade the news. Okay, like I said, I have no idea what the news is. Okay, but if the only time we want to pay attention to the news, if we do it all, is when it supports the price. Okay, so let's say it's in a nice trend here, and that's a great question, right? It's a nice trend. It's really moving, right? Kim has been in this for a long time. Yes, you can go and look to see what the news is that's supporting the move, but we don't trade off the news. Okay, I mean, good question, but just know that we never want to trade the news. We want to trade only the price action. And yeah, we can look for the news to kind of support the move. Okay, but once the price turns around, so once the price turns around and gives us a sell signal on a break of support, it doesn't matter what the news is. So it could be good news, bad news, it doesn't matter. We still have to get out of the trade. Okay, so when we trade, it's okay to have an idea of what the news is doing, but don't trade based on that. Okay, so just for future, don't trade based on that. All right. I wanted, Kim, I will get to your USD SEK. Daniel, that makes sense?
Yeah, that makes a lot of sense. Yeah,
Okay.
Thank you so much.
All right, very good, very good. So Kim, I'll get to yours in a second. I wanted to take a look at the CAD pairs here. If you guys notice, Aussie CAD and Pound CAD and then Dollar CAD, those are right up there in the third, fourth, and sixth place here. So as you guys know, these are your top trending pairs. These are your top trending pairs right here. Those are the top, and then these are the bottom pairs. We don't want to touch these, right? These are the pairs that are making money right now. All right, so Aussie CAD, that's a buy signal here, and that's building steam. All right, that's building steam right here. This is a pretty good trade here. Okay, buy signal here. It's in the markup phase. Or advancing phase. Okay. All right. So. Okay. So also pound CAD. Same thing here, pound CAD. Okay, here is pound CAD here. So that's another CAD pair full. So whatever the situation is, we don't need to know. We just know, guess what? They're buying the CAD. All right. And we've got some resistance over here. So we've got some pretty strong resistance right here. So if the price breaks this resistance here, we could definitely move higher here. So here is resistance, guys. This is pretty strong resistance right here. Right here. Our buy signal is here, and price is looking to break this resistance here. Okay, so the CAD pairs are really looking to make a move. All right, and then the dollar CAD, let's see what that's doing. The dollar CAD was a buy signal here. Okay, guess what, guys? It retraced, right? Retraced, held support, right? It held support. It didn't break support like this one here. Held support, okay? And now it's moving higher, okay? So there's definitely something going on with the CAD pairs, okay? So the Turkish pairs, CAD pairs, and then the dollar pairs, right? The dollar pairs. I would wait to see what's going on here with the dollar pairs. Remember, the dollar index here is moving higher, okay? And we had some really good trades with the dollar pairs, okay? So hold on, keep an eye on those dollar pairs, okay? So Cam, your trade USD SEK. Boy, that's choppy, huh?
Yeah. You got your latest signal is a buy signal, and I am actually up on that trade. And I'm debating whether to hold it or not. Now that I see your buy signal on it, I'm not gonna sell it.
No, it's a beautiful setup now, right?
Yeah, I'm not gonna sell it. Yeah.
All right, so let's take a look at it here.
Hey, John. Hang on, I'm in a meeting with David, and let me give you a buzz back, all right? All right.
All right, guys, let me know if you have any questions on this trade here, okay? So here was the markup phase. Here is accumulation. So let's look at this. Okay, this is a good example. So this is accumulation right here. Price broke out. Okay, this is the what phase? What phase is this?
Markup phase.
Markup phase or advancing phase. And then this is where it gets a bit tricky here. All right, this is where it gets a bit tricky. And Kim, you had been working this out here. So here is support. Here is support. I would say right about in this area, right here. And then here is resistance. What phase is this? What
you know
phase
what? In fact, actually, technically, when you look at your chart, that's distribution. But if it breaks above the resistance, then that becomes the second leg up, where it's actually accumulation.
Yeah, so it's
Yeah,
actually reaccumulation, right?
If
Reaccumulation.
it breaks above the highs.
If it breaks above the high here, guys, we've got a buy signal. So once we get a buy signal here, this blue arrow, technically we're in reaccumulation. Okay, if it broke support, right here, if it broke support, what phase would this be? What phase would we be in now?
Markdown.
Markdown. Very good, Bill. So this is a tricky area here. So once we get the sell signal, guys, to get out, okay, and price is doing this, we just have to wait. Okay, and the signals will tell us which direction, okay, and what phase that we're in. A buy signal means that, hey, we're going to continue that trend. That's reaccumulation. Okay, that's reaccumulation. All right, reaccumulation. If we get a sell short signal to go short, okay, that's the markdown phase or the declining phase. Okay, so we would short it. Okay, we would short it or we would just stay out of it. Okay, this is where you will have a lot of your frustrations, right? But understand what price is doing. Okay, so accumulation, that's where the hedge funds, money managers are accumulating. Think of this as your starting line. All right. All right. So as a, let's say as a runner, okay, so this is, he's right here in the blocks, right? So here in the blocks, getting ready, right? Price breaks resistance and now he's running, right? And you can't run forever, right? You've got to stop. Right? You got to stop, catch your breath. All right, kind of relax. That's what the price is doing. It's just taking a break.
So right here would be a time where you would invest your money and then wait until it goes up.
Yes. So after the markup, so we're gonna buy on a break of resistance. Okay, after accumulation. Okay, so we're gonna buy during the advancing phase. Every time it breaks a new resistance, that's reaccumulation. So we accumulated here, break reaccumulation. And then once price breaks support, so write this down for the new guys. The new guys that are on here, write this down. We always want to buy on a break of resistance, sell on a break of support. Buy on a break of resistance, sell on a break of support. All right, buy on a break of resistance, sell on a break of support. Okay, after we get our sell signal to get out, we don't trade during this area here. That's distribution. So price is consolidating between support down here, and then resistance. Once the price break, like right here, breaks resistance, we're gonna buy. We're gonna get in. Okay, that's reaccumulation. That's reaccumulation. All right, take a picture of this chart also, guys, for the new folks that are out right here. All right, do you guys see this screen right now? Take a picture of this, the markup phase, that's the reaccumulation. You see that?
Yeah, we see it.
Okay, perfect. Okay, take a picture of that. All right, 1 second here, guys. Hey, Brian.
Yeah.
Hey, you're not showing the buy signal here.
On that USD SCK 240 that you just shared up for Kim.
Okay, hold on one second.
I'm not, yeah, mine has the last signal I got is the sell signal, the white sell signal to get out. But I see your screen is showing
okay,
just
so
show the blue sell signal, blue buy signal.
You're not showing any of this. You see my arrow here?
Yeah,
My
I'm showing the
cursor?
first blue signal.
You're
Yeah.
not showing the next one?
Yeah, I'm not showing that last blue signal you got, the one that just popped up.
Okay, 1 second here. Okay, so this is what I want you to do. Okay,
Right.
go to time frame. So right click on your chart.
Yeah.
Highlight time frame and then go all the way to the bottom to customize.
All right. I'm
Okay.
there.
Are you there?
Mhm.
Okay, so customize, and it should be on the minute and then 240. You should see 240 there.
Yep, I'm there. Same time
Okay.
frame and everything.
Okay, how many months? How many months back right here?
3 months.
3 months back?
Yes.
Okay, hit R and control R. So just click anywhere on your chart and control R. That signal just came through, so it might be coming shortly.
Okay. All right. I'll just wait. Yeah.
Yeah, it just came through. It just popped up. So keep an eye on it. If it doesn't come up, I would say in the next hour or so, just text me, let me know.
All right. Sounds good.
Okay. All right. Let's see here. I would say, guys, just be careful. You know, just just be careful with Forex. We're going into the holidays here. Okay. So a lot of crazy stuff happens with Forex. Okay. During the holidays, a lot of the big money, they're usually out. Okay, they're usually out of the market. They're usually done for the holidays. So you know, a lot of times when the holidays come like this, we get crazy moves. Okay, so if you guys are going to trade, just trade lightly, be careful. Okay, be very careful. Unless you're in a trade like this, you know, that's up already and it's performing, it's in a nice trend. Okay, that's fine. But any new trades that you guys take on this week, especially if you're doing a short term, just kind of be careful because you could get crazy moves kind of like this here. That makes sense? Okay, because the big players are not in the market right now to follow through. Okay, and we want them to follow through with their trades, right? The big hedge funds, the big banks, we want them to follow through because they're the ones that move the market. Okay, so just keep that in mind. If you guys are going to trade this week, just trade lightly, okay, with Forex and any of the markets. Okay. Any questions on that?
Yeah, I posted a picture in the chat. I was just wondering what you thought about that with the USD krona. Sorry, I put my camera on. I don't know if you saw it. If you zoom out on the daily, you can see there's probably going to be quite a lot of resistance where your buy signal is.
So Raymond, which pair? Which pair?
That's the USD krona. The one you just had before this one.
The SEK?
Yes.
And you want to take a look at the daily?
Yeah,
chart?
if you zoom out daily, you see where I've drawn those support and resistance line. I only quickly just had a look at it. But I can see there's going to be quite a lot of resistance and it could go along the channel maybe for a few months. Potentially, I think anyway.
Okay, let's take a look here.
I think you have to zoom out quite far, really.
Hey, Raymond, you have a British accent. Is it
Yeah.
British?
That's correct. Yes.
Are you in London? Or are you in the city?
Yeah, near London. Yeah, near London.
I'm jealous.
I was just in New York actually a couple of weeks ago.
Were you? Okay. Guys, they have such an advantage because, you know, here in the States, we've got to, when their market opens, at what time your Forex market opens there? At what time on Monday?
Oh,
Is it 8:30 or 9?
yes, it'd been 9. I think it's 9.
9. So guys, when their market opens up in the 9 a.m. in the morning, for our time is 2, 3 a.m. in the morning, which is not good. I've heard of traders moving to London just so that they could be up fresh and ready to go at 9 a.m. because of the time, the time zones. All right, so Raymond, what was your question now?
Well, I zoomed out even further, but I could see the major resistance lines when you zoom out really far. And the recent rally was actually quite significant, the amount of green for the general behavior of USD krona, I think. So you could be pushing your luck if you don't take profits with such a push of pressure of buys, basically. That's my opinion. But you have to zoom out really far, probably monthly, if anything, if it helps.
Okay, so that's a good question. So let's analyze this trade then. Okay, so based on, so we're looking at the daily here. You guys can see the daily? You guys can see the daily and the 240?
Yes, we can see it.
Okay. Okay, so the daily is here. Follow me for a second. The daily is here. The 240 is here. Okay, so this is your daily. That gives you more of a foundation, right? So here was the buy signal here, right? And what phase is this in? What phase?
Reaccumulation.
It's, well, not reaccumulation yet. It's in the markup phase, right? It's in the markup or advancing phase. If it breaks this resistance, we'll be in the reaccumulation phase. It's got a yellow line. I don't know if you guys can see it, but it's got a resistance right here. Okay, but this is who is in control right now? So Raymond, I'm glad you brought this up. So who's in control? The bull.
Buyers are in control. Are you saying that it's the in the markup phase and not the distribution phase because the candles are still green?
Yeah, the candles are still green. And where is price? Where is price? So look at your chart, right? For the advancing phase, right? This is your moving average. This is important. Think of your moving average like your road. So we want price to be left of the moving average. Okay, so this is advancing markup, green candles. We are nowhere near selling right now. As a matter of fact, right? As a matter of fact, it's looking to test that resistance here. Okay, so here was our break of resistance. Here is resistance here. We got a buy signal here, this blue arrow right here, and it says here, buy, right? So price, yes, we get some consolidation in here, some consolidation in here, but most importantly, we're looking to test that resistance. So the sellers are nowhere near yet, okay? So they're still buying, they're still holding, and they're looking to test this resistance, right? When would we know that the sellers are not in control anymore? I mean, the buyers are not in control anymore. When will we know?
And there's a break of support.
When price, who said that? Who said
Me.
that? Good job. When
Raymond.
price, yeah, good job. When price breaks support, and we are not near support. Here is support right here, okay? And we're testing resistance. So this is a great example, guys. If you ever look on your daily time frame, okay, for confirmation, that's what you want. When you've got a nice trend, you're in the markup phase or in the advancing phase, all right, and it's looking to test, especially if you get a pullback to the moving average, and now it's moving higher, or you get in near an area where you're going to be breaking resistance. Boy, if you can do like Kim, where he's catching this buy signal here, okay, right on that break of resistance, you get that buy signal here. That's really good confirmation. Okay, so you get a nice uptrend, markup phase, advancing phase on the daily, right? But then your trading window here, the 240, boy, that's gonna pull this trade up here. Okay, so very good.
So, so that's the new support, that yellow rectangle bar right there, that support where it says 9.01. That's the new support, correct?
Exactly. So yeah, so this was the previous resistance. Now this is support here. Okay, previous resistance becomes support. Okay, so if the price, okay, this is what Raymond mentioned, right? If it breaks support, so if the price breaks this support right area here, then we would get a sell signal to get out. So if it breaks this area, gets down in this area here, we would get a sell signal to get out. Kind of like here, kind of price came down, right? Broke support here, okay? Right here too, right here. Here is support. Okay, here is support right here. Okay, so price is doing like this. Okay, look here, guys, look here, look here. Follow me for a second. So here is the daily. So we're good here, but look at this area in here. Okay, it's a different time frame, but I want you guys to see it's the same price action. So look at this price action here. Look at this price action here. It's almost identical, right? So if the price right now, the price is all the way up here, right here, looking to test this resistance. But guess what? If the price gets down in this area here and breaks this support, this yellow line right here is drawn automatically. That's your support. Okay, so if it does that, kind of like here, right? Kind of like here, we'll get a white consolidating candle, break support, get a sell signal right here, white arrow, sell signal to get out. Kind of like here, buy here, sell here on a break of support. So the fact that our price is nowhere near support, okay, we don't have a white consolidating candle, we don't have a red candle, that's really, really strong confirmation that guess what? Price is holding. We're definitely in the markup phase, okay, advancing phase. And boy, this buy signal right here on a break of resistance on the smaller time frame, the 240, those are the types of trades we want to take, right? If price fails and breaks support on this time frame and gives us a sell signal to get out, we'll take that loss every time because we've done everything right. Okay, so good call, Raymond. You know, looking at the daily here. Okay, but that's confirmation. This is a great trade. Okay, great trade. All right, anything else, guys? Any other pairs you want to see?
Are there any common pairs that I guess are the most popular that everybody trades? I heard that it's like UST, maybe with Japan, or but just popular trades that everybody always does, that it's kind of like more common to win. I don't know if that makes sense, but
Okay. Yes, so there are certain pairs that are popular with traders, and it's usually the yen pairs. Okay. But what we want to do is we want to change that thinking, because so these are the most popular pairs here to trade, like the pound yen by far. And the pound yen is my favorite. You know, it's one of my favorites to trade. The pound yen is popular. Aussie yen is popular. Okay. Euro yen. Okay. There's a lot, and traders love to trade these pairs because there's just a ton of volatility in those pairs. Okay, lots of volatility in the yen pairs. Okay, especially pound yen. Okay, and then apart from the yen pair, the Turkey, I mean these USD TRY, EUR TRY, those are becoming very popular pairs to trade, and then the ZAR pairs. Okay, so the South African rand, those pairs are really moved, but by far most traders like the pound yen, the yen pairs. Okay, when we trade though, what you guys want to focus on is really not the pair, rather than what's trending. Okay, so if you notice here, we track about 40 pairs. Okay, and we want to be in just the pairs that are trending and making money. So like the pound yen right now, it's consolidating. So this is where most traders mess up, guys. They have their favorite pairs. Okay, so they have their favorite. Who asked that question?
Daniel.
Oh, okay, Daniel. Okay, so good question. So where most traders mess up is that, you know, they have their favorite pairs. Okay, and that's okay when it's trending, when it's moving, but when it's consolidating like this, right? So it's in a tight consolidation. If you guys look here, the pound yen, that's 18. That number here, 18.83. So any number below 20 is consolidating. So we are consolidating between support and resistance. So we wouldn't trade this pair. All right. Now, you could trade it, but just know that it might stay in a tight consolidation for a while. Okay. So rather than being in these pairs here that are trending higher, that are moving to the upside. Okay, so we want to trade the pairs that are trending, that are moving to the upside, the ones that are consolidating. Okay, we can kind of wait until they're ready to break out. So yes, I mean, as a trader, you'll have some bias to particular pairs, but then just try to focus, try to broaden. And I know it's hard if you're trading manually to track all the pairs, and that's why most traders only focus on, you know, their favorite pairs, usually 3 or 4 pairs. Okay, but just know that if the pair is not consolidating, I mean the pair is not trending and it's consolidating, you're going to be stuck with it, and you might miss out on other pairs, you know, that are trending like this. Okay, so we're not married to any particular pair. Okay, obviously, yeah, we might have a favorite, but we jump on whatever is moving. Whatever is moving is what we want to jump on. Okay, good question, Daniel. All right, any other questions? All right, so this is basically it for Forex and cryptos. Okay, guys. We're gonna continue with the 6 o'clock class. Okay, coming up. That's focused on the systems. So those of you who want to stay, we're focusing on how to use automated trading systems to trade. Okay, and that class will go from 6 to about 6:45. All right, so if there isn't any more questions on Forex, I'll let you guys go. Those of you who want to stay, we'll start in a few minutes. Forex traders, crypto traders, just remember, be careful here with Bitcoin. Okay, it's definitely in the markdown phase. Okay, watch your other cryptos. So if you're in any other cryptos, just know that as Bitcoin goes lower, okay, so will your other cryptos. So just be careful. Okay, it's definitely in the markdown phase. Okay, markdown phase, declining phase, and it's apparent. We have no support. So we have no support line, so price could go lower. All right. Again, I'm looking at a support area here of about 40,000. Bitcoin lags these whole numbers. So 40,000, okay, is your next big support. And then 30,000 down here is your next big support. Understand that Bitcoin is no longer on the daily time frame, no longer trending. All right, it's broken its trend. All right, it's broken its trend. It's no longer trending. All right, so keep an eye on this here. Now it's caught in between support and resistance. So here, 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 right? So the next target, if the selling continues, is down here. So it's caught, it's not trending anymore. Not on the daily time frame, it's not trending. Okay, so it's kind of doing like this. It's kind of doing like the dollar index right here, kind of like this right here. You guys see that?
Yeah.
Okay, so just be careful. All right, can't tell you what to do, but you guys see what phase it's in. So it's in the declining phase, markdown phase. So that's all we can go by. That's all we can go by. All right. And I think that's it. So I'm going to take a break here, and then we'll start back in a few minutes. Okay. Those of you who, again, we're just going to go over the systems and why we should use automated trading systems. All right.
All right, David, we'll see you tomorrow.
All right, Kim. Take care,
All right.
bud. Okay.
Commitment to transform the energy grid, preventing thousands of outages.
David, you're still on mic. You're still on audio.
they can't box me in a bullet. This that drip is more like oceans. They can't fit me in a Trojan out of pocket, but I'm always in my bag. Yeah, that's the slogan. This that who's on there? I'm pulling up with an emo chick that's broken. This that car that's got the music. You like that shit be stupid. And my friends are all annoying, but we go down here, we go stupid. This that 10K on the cable just so we can be secluded. And the vodka can't dilute it. One more line, I'm superhuman. Fuck you, and you, and you. I hate your friends and they hate me too. I'm through, I'm through, I'm through. Bitch, that hot girl by my anthem. Turn it up and throw attention. Fuck you, and you, and you. I hate your friends and they hate me too. Fuck you, and you, and you. Bitch, that hot girl by my anthem. Turn it up and throw attention. This the college dropout music. Every year like that shit be too thick. And my friends are all annoying, but we go down here, we go stupid. This the college dropout music. Every year like that shit be too thick. And my friends are all annoying, but we go down here, we go stupid, we go stupid, we go stupid, we go. And you want me to change? Fuck you! Fuck you, and you, and you. I hate your friends and they hate me too. I'm through, I'm through, I'm through. It's that hot girl by my anthem. Turn it up and throw attention. Fuck you, and you, and you. I hate your friends and they hate me too. Fuck you, and you, and you. It's that hot girl by my anthem. Turn it up and throw attention. I've been on my own for long enough. Maybe you can show me how to love. Maybe I'm going through a drought. You don't even have to do too much. You can turn me on with just a touch, baby. I look around, city's cold and empty. No one's around to judge me. I can see
All right, guys, we're going to get started shortly here. All righty. Okay. So this class is on trading systems. Okay. The importance of using trading systems. Okay. So what we want to do this evening is just have a conversation about trading systems. Okay. And I kind of want you guys to kind of want to find out if you guys have any knowledge of trading systems. Do you know what they are? Have you guys used them before? So I'm just going to open it up. Okay. Open up the floor. And I want you guys to ask me any questions you might want to know, just anything at all about trading systems. Okay, so just go ahead, guys. Any questions on trading systems, how they work?
Dave, I've got a question. We opened up two charts side by side before we closed up there a few minutes ago.
Okay.
One on the daily and one was on the 240.
Okay.
So the sell signals are definitely different. Or I'm sorry, the buy signals are different on the two different charts.
Yes.
So it's probably wise to stay with one strategy, like if you're going to trade it on the daily chart rather than the 240 chart. Is that what I'm thinking? Or because the buy and sell signals are different, right?
Yeah, so that's a good question. So when we trade, guys, when we trade, we need to pick a trading window. We call it a trading window. Okay. And when we do our one-on-one coaching, I try to get the traders towards the end of our coaching to kind of pick a time frame. Okay, so for instance, it could be a daily time frame or a 240. Now we can change that based on the environment, okay, that the market is doing, based on what price action is doing, but that takes a bit of skill. Okay, I've been doing this for over 25 years, so I can move very fluid from one price chart to the next and trade within that trading window. But for new traders, I always recommend sticking with one trading window until you get really, really good at that trading window. Okay, so for example, the 240, we were looking at the 240, right? So the 240, that's our trading window right now for the Forex market. All right. And the trading window is based on what price is doing. Okay. So if price is really, really trending, if that market, so let's say the Forex market is really, really trending, right? We might open up that window to a daily chart. Okay. But if the price is kind of consolidating, right now we've got wide consolidations on the dollar index, which is a barometer for Forex, right? So we can open up that window to a 240-minute time frame. If the Forex market as a whole starts to consolidate more, we might have to move that time frame to an hourly time frame or a 30-minute time frame. Okay, but for new traders, we want to stick to a particular time frame. Okay, a particular trading window. So like we did with for Raymond's example there, right? Our trading window was the 240-minute time frame or the 4-hour time frame, but we went to the daily to see what the daily price action was doing on the daily time frame. Now you guys can do that, right? So you can go to a daily time frame, you could go to a weekly and a monthly just to see what price is doing. But always remember, okay, if you're trading on a 4-hour chart, execute your buy and your sell on that same chart. Okay. Okay, so what happens a lot with new traders, so they might start trading on a 4-hour time frame, and this happens a lot. Your trading window might be a forward time frame, but you go to a 1 hour time frame, okay, to see what the price action is doing, or the daily time frame, and then you start entering trades on that time frame. That you don't want to do. Okay, you want to stay within your window, your trading window, and execute your buy and sell based on the price action on that window. You don't want to go back and forth. That makes sense, Bill?
Yeah, that does. So what you're saying is decide which strategy you want and stick with it for both the buy and the sell.
Yeah, and something else you guys want to keep in mind as traders, right? And at some point, as you guys get really good at this, like I said, you could go from one time frame to the next, all right, and you can do it easily. What you want to keep in mind is that the lower the time frame, okay, the higher the more the volatility will increase. Okay, so like a day trader might trade like a 5-minute time frame, okay, or a 1-minute time frame. So that price action is moving really, really fast, guys. Okay, so on a 1 minute, 5 minute, 10 minute, 15 minutes, you got to be in front of that of your screen. All right, so you've got to be there watching your screen. So that takes a different type of personality, a different type of trader. You got to be really, really quick to be able to trade the lower time frames. So that's basically your scalping or your day trader, your intraday. You're trading intraday. Okay, so you're trading intraday within that day. So you're not holding any positions. Okay, usually when you get to the 1 hour chart, the 60-minute or higher, then you're looking at swing trading. Okay, so the forward chart is what we're doing. We're doing a swing trade. All right. Now the swing trade, you can hold that trade like Cam is doing for his trade. That's a month. That's almost a month and a half. No, that's long. Okay, and we like it when that happens. That means we it's trending and we're making money. But we can sit back a bit. We don't have to watch the monitors every 5 minutes or every 10 minutes, right? Once every 4 hours, we can take a look at how things are playing out. Okay, and then the daily time frame, that's even longer. That's for position traders, right? So only once a day we have to make a decision. So folks that work, people that work, right? They work. They can't be in front of the monitors, right? In front of the screens. They like to trade on the daily time frame. So they get home from work, they can look at their charts and see how the price closed on that day and then make a decision. Okay, so there are lots of things we have to keep in mind when we decide on which time frame to trade on. Okay, the biggest thing I tell traders on deciding the time frame is decide we want our trading to work for us. We don't want to work for trading. Okay, so whatever your schedule is right now, because most of us have to work, right? We've got family and all these responsibilities. So I always tell traders, pick a time frame that's going to go along with your schedule. Okay, and that way you'll have more success because you're not changing everything. You're not changing out your whole life for trading. Okay, so someone that has a 9 to 5, usually the 4-hour chart, if they've got some flexibility at work where they can log in on their phone to see their screens, that's great. If they can't do that, right, and they have to be tied to their job all day long, can't look at screens, then the daily time frame. So don't base your trading, okay, or the time frame. Sometimes you'll have to base it on the markets, but if the market is really consolidating, just forget about it, okay, until it starts trending or find something that's trending to trade on the daily time frame. Okay, that makes sense?
Yeah, thanks, Dave.
Yes, it does.
Andrea, you had a question? Thanks, Bill.
No, I was confirming what you said because during this week, there was a big hacking, not hacking. Well, there was a hacking and there was this log4j thing. I don't know if you heard about it, but I'm in IT, so
Okay.
I was very busy this week. And because of patching servers, doing all kinds of stuff. Next thing I look back at some of my stocks, they were below resist support. I didn't have trailing stops or anything, and I'm like, damn, I'm losing money on these things. All right, and so what you said kind of resonates with me because I'm trying to learn Forex, but
Okay.
I want to be able to manage the time and yet stay within positions that are winning positions. So that's the big issue I'm trying to resolve in my mind. How do I do that? I don't know if because if I'm looking at the chart and I see, okay, it's let's say it's a markup situation going on. All right. Hey, that's well and good. I buy.
Okay.
Okay. And I go off for an hour or two and I come back and now it's a markdown and I missed the sell signal. I guess the question there is how do I position myself so that if the sell pops up within that hour or whatever that I'm gone, I can still make that sell, so I don't come back and find that it's really down at the bottom and I've lost a ton of money.
Okay, so let's take a look at, that's a good question. Let's take a look at some examples here. Okay. All right. Let's see here. Let's do this. It shouldn't happen that quickly. Okay.
That's the thing. I'm not familiar with Forex. That's why I'm, but go ahead.
Yeah, it shouldn't matter so there are a few things that we can do to kind of manage. It's all about managing our time and then managing the trade. Okay, so managing our time. If you're able to manage your time, and when I first started with Forex 2001, and that's when Forex really became started to become available to the retail trader. Okay, so this was 2001, 2000, and every Forex trader had bags under their eyes. Okay, we had bags because we didn't get a lot of sleep. Because as I mentioned earlier, I'm jealous of Raymond because he's over there in London, okay, or over there in Europe, because over there the time frame is different, right? So when they're up 9 a.m., let's say 8:30, 9 a.m., their market is opening, and the Euro session is the biggest session. That's the session where, boy, Forex loves that session. So for them, that's their regular wake up time. But for us here in the States, that's 2 or 3 o'clock in the morning, and we've got to be up trading that market. So, and we've got to be fresh. So when I first started trading Forex, it was really, really tough. I don't do that anymore. I'm not up at 2 or 3, 4 o'clock in the morning anymore, because I've increased my trading window. And I know how this thing works now. But when I first started, and most traders, new Forex traders, they're up, they're up early in the morning, and they don't get much sleep. So that plays a lot. And then let's say they've got to go to work. So let's say they're trading 2, 3, 4 o'clock in the morning, and they've got to go to work at 8 o'clock. Boy, you can only do that. You guys can imagine, right? You can only do that so long, right? Right? You're not going to last very long doing that, right? You're going to get burned out pretty quickly, right? Okay. So what I tell traders to do is have your trading work around your schedule. So let's take, for instance, this trade here. And Andre, to your question here, right? So you know, most traders are working until they get to the point where, you know, they might, if they get really good, might be able to trade full time. And this is where trading systems really help. Okay, this is where really trading systems will give you guys an edge. Okay, give you guys an edge, give you your time back. Okay, give you your time back. If you guys look here, I'm gonna show you guys 1 second here. Okay, you guys see my screen? I don't think you guys can see that. Okay, I don't think you guys.
Automated trading systems, we see that.
Yeah. Do you see where it says somewhere it gives you your time back? It should say that somewhere in here. Gives you your time back. That's fine.
Maybe it's down at the bottom and
Yeah.
you know.
Okay.
Scroll.
Okay. So if we look here, guys. So let's say Andre, the 4-hour chart is a good. It's a very popular time frame for Forex traders. The ones that do not like or don't have the time to be in front of the screens, and they have you know, they have jobs to do. Okay.
Okay. I work remote. I guess I can have another screen up on my desk or whatever. But some days, like I said, you know, can get very hectic. And since I wasn't using an automated system like yours, you know, I can miss out on what's going on. But
well, follow me for a second. I'm getting some background noise. Okay. So here. So each of these candles, guys, here was our buy signal here. Here was our buy signal. And the system gave us a buy signal. Okay. So we're using an automated system that when price breaks resistance, we know when price breaks resistance, we're going to get a buy signal. Okay. So here was our buy signal here. Okay. So let's say we're working or we're doing whatever we need to do. This buy signal will be sent to you, generated by the system. This is why we use trading systems, generated by the system, okay, and sent to us by email. Okay, so we don't have to babysit the monitor. We don't have to, we can track all of these pairs, and when it gives a buy signal, we'll get it by way of email. Okay, by way of email. So let's say we are working, we got this buy signal here, right? It came by email. We would go in to our Forex account. So let's say forex.com, and then go ahead and execute the trade. And then that's it. Every candle here is 4 hours worth of data. So when you enter that trade, guys, you won't have to make a decision until the next 4 hours when the next candle open. Okay, so the system is going to make a decision on every 4 hours. So here is 4 hours here. Here, let me open this up. Okay, so it's all about trading needs to be easy, and when it needs to work for us. So here is 4 hours here, 4 hours here, 4 hours here, 4 hours here. That's a whole day. That's a whole day. Again, guess what? We haven't done anything. Okay, so the system is holding it. Price never broke support. We only get out when price breaks support. So price, although we got some bearish candles here, price never broke support. Here is support right here. It held. Most traders would have lost money because they would have had their stop loss in this area here. We don't have any stop losses, okay? Because we know that 9 times out of 10, we're gonna get a pullback, okay? So Ricky talked about this. Ricky talked about liquidity, right? That the big boys are trying to get that liquidity. So they're gonna run your stops, get you all out, okay? And then move the price higher, okay? So that's not gonna happen. We have no stop losses, okay? So it's gonna hold It held support. Now, if it had broken support, sellers would have came in and then we would have gotten a sell signal to get out, and that would have been sent to us by email also. So that's one way of keeping tabs on your trades using an automated trading system like this. Okay, but guess what? Since every candle here is a whole 4 hours worth of data, 240 minutes worth of data, we can relax. Okay, rather than traders that trade every 5 minutes. So every candle here is 5 minutes worth of data. So every 5 minutes, they've got to make a decision. Okay, if they trade on a 30-minute time frame, every candle is 30 minutes. So they have to make a decision every 30 minutes. The system will have to make a decision, or they have to make a decision based on price, what price is doing. We've got 4 hours. And if we move it to the daily time frame, then guess what? Every candle is a day's worth of data. So the big hedge funds, big institutions, they trade on the daily time frame because they don't have the time. They want to wait at the end of the day to make their decision based on what price is doing. That makes sense?
Yes, it totally does. And I'm glad you went through this.
Yeah, so Andre, with your position, let's say, right? Yeah, let's say your positions, right? You would not have had to make a decision in 2 hours. If you were trading on the 4-hour time frame, on the 240-minute time frame, you would just have to take a look at it, okay, after four hours. And that usually gives us, all of us, enough time, okay? And if we have an automated trading system, all we've got to do, if we don't get an email with a sell signal when the price breaks support like this, you guys see here, it broke support like this, then there is nothing to do. We can relax in the trade. Understand that the way we trade, okay, the way you trade as traders, we're gonna buy at resistance. That's when the institutions are buying. Buy at resistance, sell at support. Okay, we buy at resistance because that's when they're buying. That's when they're buying. That's your markup phase. We're gonna sell at support, okay, because that's when the sellers come in. This is in the markdown phase, okay, and we call this the meat of the trade. From here, follow me, guys. From here to here is the meat of the trade, okay. Most traders want to get the bottom here. They want to buy here, but that's not a buy, because guess what? We haven't broken resistance. That's still in the seller's territory. Okay, so all down in this area here, that's in the seller's territory. Okay, we only buy when price break resistance. Up in this area, that's the buyer's territory. Okay, so we can't get out. We only get out when the sellers come in, and it price breaks support. Okay, so we bought here, price went up. Okay, on a break of resistance. Okay, price came down, hit support, the sellers are in, we got out. So we bought here, sold here. And we automate this process. This is identical to your charts. So we bought on a break of accumulation. So price broke accumulation, we bought. Okay, we bought. Okay, this is the advancing phase. Once price breaks support on this now is the distribution phase. Okay, it broke support. Guess what? This is your declining phase. Okay, this is the 4 market phases. The only thing we've done is we've automated this process so that we don't have to waste time watching the screens. And guess what? We can get an email to alert us when the price broke support to get out and when the price broke resistance to buy. Okay, so here was our buy signal on a break of resistance, markup phase, advancing phase, broke support. This is distribution. This is the markdown phase. We would have been out. Where most traders are losing money, we would have been out. Okay. Price now broke resistance again. We're now in the markup phase, and we do it all over again. You guys see that?
Mm.
Any questions on that? Andre, that makes sense?
Totally does. And like I said, I'm very happy that you explained the time windows, etc., and the candles, because that wasn't clear in my mind, and I just thought, you know, I had to sit there and watch this thing.
Yeah, big difference, huh? So opening up your
Yeah.
time frame, will definitely help. Okay, open up your time frame will definitely help. We use automated trading systems, guys, to take away the emotions. Okay, so we use automated trading systems to take away the emotions. Okay, as traders, we've got to be, accuracy is important, timing is important. Okay, so if the price breaks support and we don't get out for whatever reason, let's say we're not in front of it, okay, or the price just really moves fast, okay, or we just think that price will move higher, and we don't get out, it could cost us. I mean, this is a big move to the downside. Okay, so if let's say we were lucky enough to buy here. Okay, so let's say we were lucky enough to buy here, right? So we got in here, price went up, and our price is coming back down, and we don't have the system. So let's do this. Let's do this. Can you guys hear me okay?
Yep, I can hear you.
Okay, so let's say we had a chart like this. All right, and we're just leaving the support and resistance. So let's say we didn't have the buy signals, right? And just this alone will gives you guys a lot of information, because you've got the green candles, you got the red candles, but most traders don't have this stuff, right? Most traders don't have support and resistance. They don't have the support and resistance lines, right? They might have the colored candles here, but they don't have the support and resistance lines. So let's say you guys have this without the signals, okay? And let's say you did pretty good. You got in on a break of resistance here, right? Price went up, okay? And now price is coming down, okay? I mean, if a lot of times what we assume is that price is going to go back up, right? So we say, okay, man, it came down here, it's going up here, it's going to go back up right here, it's going to go back up, you know, so let's just hold on. And guess what? Here it's got some buying here, it's going to go back up, but the whole time price is making lower lows, lower highs. Okay, lower lows, lower highs, and it keeps going down. Yes, it might move up. We look at our account, it's positive. It's not positive, but it's better than when it was here. Okay, so it was really low here, but now it's up here. So we think, oh man, it's better. I haven't lost as much, right? It'll probably go back up, but the whole time it keeps going down. Okay, it keeps going down. Whereas when we use an automated trading system, there are no emotions. right? There are no emotions. It is what it is, right? It is what it is. So let's bring in the automated signal now. And we say, hey, okay, here is where it broke support. Okay, even if I wanted to, or our traders wanted to take to hold on, there is a clear here. There's a clear signal to get out. And it says here, liquidate, long liquidate. So the long position, we need to liquidate right here, that long position. We need to be out. So we need to be out. So regardless of what we think, right, we need to be out of that trade. We need to be out of that trade. And as traders, we need that. We need that help because there's so many things. All our emotions is tied up in this because we're trading our money. It's our money, right? It's our capital. So we get really, really emotional, right? Professional traders are not emotional. Professional traders, the reason why they're professional traders is because there's no emotions that's tied to their trading. They're like machines. They're like a robot. They just buy and sell. When they're based on whatever their rules are, when it says sell, they sell. When it says buy, they buy. So what we do is we design the trading system so that you become a professional trader. Because if we leave it for you as a trader to do it, you're not gonna do it. You're not gonna get out the trade as precisely as this. We call this the meat of the trade. This is very good trading here. Okay, to where it's gonna buy on resistance, hold the trade. It didn't break support. It's holding it all with all this nonsense right here, all this mess right here. Guess what? It still held the trade until it broke support right here and the sellers come in. You guys are not going to be that good. I can tell you that. You're not going to be that good. You're not going to be that quick. You're just not. You're not going to be that good. Very few traders can do that. And our top trader, Ricky, I've only seen one Ricky in all my years of doing this through us. Now, I've seen other traders do this. When I worked for a day trading firm, we had traders there that did this, but they're few and far between where they're really, really good. Okay, so we use trading systems. I'm not this good. Okay, if I had to do this manually, because I get emotional, even now. Okay, even now, I need the trading system to alert me of when to get out. Okay, and most of us do. All right, and the biggest thing with using really good trading systems, not all trading systems are good. All right, I don't like robots. I don't like bots that are constantly trading. Okay, a good trading system will buy when the buyers are in. When the buyers are in on a break of resistance, it's going to buy, and then it's going to sell on a break of support. That's a good trading system. Okay, buy on a break of resistance, sell on a break of support, because the buyers are in, the sellers are in. We've got to get out. Okay, I'm going to take a look at Kim's trade. So this is Kim's trade right here. He is still in this trade. Most traders would not be in this trade. So here was the buy signal all the way down here. Okay, he's still in this trade. We had a lot of movement, never give a sell signal. This is almost a month and a half. And he's still in this trade. because it hasn't broken support. And this is a month and a half. This is a 240-minute time frame. This is why we use trading systems, because we just can't do it. And you know what? Can you guys hear me okay?
Yeah, I can hear you.
You guys can hear me? Okay. So this is what you guys really need to think about. Okay, this is what you guys are really need to think about. Okay, so professional traders use trading systems. Hedge funds, institutions, they all use trading systems. So why don't we use trading systems? I mean, if they're using trading systems, they're not taking trades. You guys are going up against, when you trade manually, you're going up against trading systems. I mean, just think about that. When you trade manually, you're going up against a machine, and you're not going to win. You're not going to win. If you're trading manually, I don't care how good, you got to be really, really good. You got to be really, really good. Okay, you got to be really good. A lot of experience. You've got to be good to go up against the systems, because when there's going to be a point in time when they're going to get out of this, right? There's going to be a point in time when they're gonna get out of USD TRY. It's gonna break support, and they're gonna get out. And if we think that, hey, for whatever reason that we like the news, right? We love the news. It's gonna go up. We've got different targets. We can watch the daily time frame, and we can watch the levels, and we think it's just gonna go up higher, and it breaks support on the 240, right? And we get a sell signal to get out. But guess what? Let's say you don't have the system, and you don't know that it's broken support, and you don't know that it has a sell signal, okay, to get out, and you stay in, and they start dumping it. They start getting out because the money has been made, right? And now it's in the declining phase. If we were lucky enough to capture this, guess what? We're going to lose it all back. That's what happened to most traders, right? So you might be lucky to catch a move, but guess what? You'll give it all back. So let's say this is an example here, and I can look at chart after chart after chart after chart after chart. It's the same thing. Here is accumulation. Here is advancing. So we bought here on a break of this resistance, right? A break of this resistance, sold on a break of support, right here, got out. Boy, they came in pretty heavy, right? So we bought here, sold here. We didn't get the bottom. We didn't get the very top. We got the meat of the trade. We got the meat of the trade. We got out here. We made money. Guess what? They're selling this. This is in the markdown phase, the declining phase. We're out. Guess what? If the regular trader, if they were lucky enough to buy here, lucky enough to take it all the way up, okay, most traders are not lucky enough to get out in time. So guess what? They bought here, price came all the way down here. They probably broke even or took a loss. So a good trade turned into a losing trade. So when we have automated trading systems, hey, price is breaking resistance. We got a buy signal here. We'll get an email. Okay, we'll get an email to alert us. We got a sell signal here. We'll get an email to alert us to get out. We bought here, sold here, selling came in. Guess what? We out. We're not losing money here. Another one here. Buy signal here. Broke support right here. Got out here. Guess what? We are done. We're out. Okay. We're out. Markdown phase. We're out. We're looking for other opportunities. You guys see that? I've got a few more minutes here, about 10 more minutes. I want to show you guys something here. Okay, we're tracking 40 pairs. And I think this was Daniel. Is Daniel still here? Okay, mentioned this earlier, right? How many pairs, which pairs do you trade? Guess what? We only trade what's moving. We're gonna watch all of them. We're gonna watch all 40 of them, right? All 40 of them. And then whenever they give a buy signal, we'll know. We'll know they break resistance, we'll get an email. But guess what? We're not tied to any particular pair. But guess what? Because guess what? That the pair might be consolidating and it's not ready, it's not tradable yet. Okay. But we can trade long. So up, all these pairs here, okay, are being monitored automatically by the system. We're not manually doing anything. Here, our short side, if we wanted to go short, all of this here is being it's running automatically, with or without us. With or without us. It's running automatically with or without us, but will alert us. Okay, so that's Forex. Okay, within that we can watch Bitcoin. Okay, it's running, it's going down further, right? It's when we get a buy signal, we'll be alerted. So we can watch Forex, we can watch Bitcoin, we can watch all the indexes. So the S&P, the NASDAQ, the Dow, okay, all of them, we can track all of these different markets, the VIX, all at once. You know how much work this will take? Here, our sniper trader trades, we can track it. Our stock boss, okay, we can track all these indexes here. Okay, when they give a buy signal or sell signal, we get an alert. So we can track all we have traders that have all our systems. And they're trading different markets, and it's not a pain. It's not hard. Here is HitSeeker. This tracks 22,000 stocks every day for us. You imagine the work that it would take to track over 20,000 stocks every day. This tracks it for us automatically every day. HitSeeker right here. Okay, HitSeeker for Bullmaster. Okay, another system that's tracked every day for us automatically. Monster ETF, that's tracked all over 700-800 ETFs every day. So I want you guys to really, if you really want to trade, you have to have an automated system. You just do. You do. If you're serious about trading, all the professional traders, and if you guys aren't thinking like a professional trader, you're going to lose. I'm going to repeat that. If you're not thinking like a professional trader, because they're going to take your money. If you're just in the markets and you're going up against professional traders and you don't know what you're doing, you don't have the right tools, they're going to take your money. 80 to 90% of traders lose. So you've got to get on the other side. You got to think like a professional trader, just like we do for our one-on-one coaching, trading in the zone. So you've got to think like a professional trader. Then you've got to get the tools. You've got to get the same tools that professional traders use. Then you've got an edge. Then you can compete. Until then, it's a losing game. You're gonna lose. Okay, you're gonna lose. Okay, because it's really hard. So you've got to get an edge. You've got to be buying when they're buying and then you got to be selling when they're selling. If you're selling when they're buying, and then you're buying when they're selling, you're going to lose. So if you're buying in the markdown phase and selling in the markup phase, and you don't get out when they get out, let's say here you don't get out when they get out, and you don't get in when they get in, you're going to lose. It doesn't matter. It doesn't matter how smart we are. It doesn't matter. The market doesn't care. Okay, and this is why we use trading systems, because it's going to give us an edge. We want to follow. We want to be right there, right when they start to buy. I mean, look at this. Here was our buy signal here. Look at this. Right when they want to buy, right when they start to buy, we want to be buying right with them. When they sell, break up support, we want to be selling. We want to be out. And it's that simple. It's that simple. But, you know, a lot of traders get into this business and they think they can compete because, you know, against systems like this. And, you know, we're not going to. We can't compete. It's too fast. It's just too fast.
David, could you take a look at Apple?
Apple, yeah.
I think it's AAPL.
So this is on the daily time frame. Let's see here. All right, so here was the buy signal here, sell signal, and then broke resistance here, buy signal. The last buy signal came in at 153, and right now it's at 171. It's in the markup phase. This is on the daily time frame.
Okay.
Are you in
Hasn't
this?
broken
Are you in this, Andre?
Yeah,
You in it?
been in it for a while.
Okay. Where was your buy signal? Where did you buy? What price? If you don't mind me asking.
Well, I've had this since before they split. They did a 10-for-1 split, so it's been a couple of years now.
Oh, okay.
The last stock I asked you to look at before, Enphase, ENPH, that was the one I told you I bought at $7. Yeah, I think it might be coming down. I don't know, but I got
You got in at $7.
Yeah, and I sold it at 233.
So you out of it?
Now I think it might be 190.
Oh, okay. Yeah, it's in trouble. Are you out or are you still in?
I have a small holding left.
Okay.
But because I made so much money on it, you know,
Yeah,
I was
yeah.
like,
Yeah.
Oh, there was a sell signal up there.
Yeah, this is on the daily.
40.
Yeah. We always have to watch the sell signals on the daily, because that's what the institutions watch. Okay, so the market makers, they don't really care about the 240. They don't care about the weekly. The daily is where they trade. Okay, so they trade on the daily. So we always have to be careful, okay, on the daily time frame. Okay, so if they sell, if it gives a sell signal on the daily, we just have to be very careful.
Yeah.
Yeah.
Well, they're the volume buyers or sellers, so they affect the price of the stock, right?
Yes, you know, as retail traders, we can't move the price. So it's not retail traders that are getting out. These are the big institutions. You know, I want to show you guys something. the market, we've got the NASDAQ, Russell, they're kind of weak. The market's kind of weak right now. The Dow, here's the NASDAQ here. Boy, it doesn't look, if it breaks this support here going into the week, I mean, we could see some selling. But here's our bull master system. But I wanted to show you guys this here. We just opened this because the market is kind of turning, and I want you guys to see the importance of trading systems. So here's the Dow, the S&P, and especially the NASDAQ. It's clearly, in the distribution, getting into the declining phase. And our heat seeker pulled up these stocks here. I want to show you guys these. These are NASDAQ stocks. Okay, so the NASDAQ is going lower, and then this heat seeker is what pulled up stocks on that's currently in the NASDAQ. And I want you guys to see, if you look here, why it's really, really important to what I'm going to do is I'm going to turn up the short, and I'm going to turn off. You guys with me? You guys still with me?
Mm-hmm.
Okay. Yeah. Okay. I want to show you guys this, and then I'll let you guys go. I just want you guys to see the importance that there are people out there losing money, right? So when we don't get out of stocks, because the institutions are getting out, but the retail investor is still in. So I'm going to go through, there's a ton, and I was surprised by this. There's just a ton of stocks that they are dumping, okay? And the unsuspected retail investor has no idea what's going on, okay? I'm going to just go through this, and I want you guys to see the red. Think the red here. You see, guys, see the red candles here? Mm-hmm. I see the red. Okay, these are people losing money, and I want you guys to really start thinking like that. Okay, right? Because there are people in the markets, and these red candles, they're losing money. So I'm gonna go through these stocks here, and like I said, I was very surprised, right? So I'm just gonna go through this, right? Look at the right side there. See the red there. Look at that one there. Look at that one there. You guys see that?
Yep.
Look at that one there. You don't want that to be you guys. And a lot of these folks think that, hey, I'm going to keep adding. Look at this. Look at this. Look to the right, the far right. Look at the price to the far right, right? And a lot of times what people will do is they'll keep adding. Okay, it's going down, and they think that, hey, it's down. I'm going to buy more. I'm going to get a cheaper price. I want a cheaper price. I'm going to buy more. But then it keeps going lower, right? I want you guys to get this. Here was the high right here at 37. People bought here, people bought here, people bought here, people bought here. It's going lower, and they keep buying. Look here. Look here. All these stocks are going lower. Look here, from 52 to 41. Look here, from 100 to 42. From 36 to 20. From 44, I missed that one. Keep looking to your right, okay? From 240 to 68. We don't want to be those folks. All these stocks are dropping and people are in them. The institutions are out. Everyone else is in. These are retail investors that are still in. Stock after stock after stock. So from $90, guys, this is from the beginning of the year, from 90 to now 29.
So David, based on what you're showing here, are we in a downturn, and should we be going to cash or shorting stocks, or what's your suggestion?
A lot of our traders, you know, they get puts. We're looking to get puts. So as the price goes down, we'll get shorting is kind of hard, but we can get puts and make a ton of money with puts. Yeah, yeah. So we want to reverse it. So we want to get out at the top, right? So let me find one here. So what we would do is we want to get out at the top, and then we want to take it all the way down. So we want to make money up and then make money back down. All right, so I'll finish with this and let you guys go. So let's find some shorts here. Let's find some shorts. So here would be a good short here. Here was our sell short signal, this arrow here. Price broke this support right now. Right now it's in the markdown phase. So we would short it. We would get puts here. We would get puts. So the NASDAQ is weak, and then this NASDAQ stock is weak. Okay, so we would get puts here, and we make money as the price goes down. Okay. So this one here is waiting. We don't have a short signal yet. We would wait on that. Nothing here yet. This one here is our short signal right here. Okay, short signal right here. So we will get puts. It's moved a little bit, but you guys get the idea. The bottom line is we don't want to stay in these when they're dropping here. This one here, we would got here was our sell short signal here on this break of support. So we would gotten puts here, and it's all the way down here. So where most retail, here was one here, broke up support right here. We would have gotten puts here. It's all the way down here. So whereas most traders, most investors especially, are losing money, and a lot of them are adding to their position, which is a recipe for disaster. Once the price goes down like this, you're in the markdown phase, and you start buying more because you think it's a cheap price, boy, and it gets lower and lower. It's all right. So we want to take all our profits, and then in the markdown phase, okay, declining markdown phase, we want to either short, we want to be out, short, or get puts. Be out, short, or get puts. Protect our capital. Okay, we don't want to be in. We don't want to be in. There's another short here. Great shorts. And these options, boy, these options do really well. Here's a nice one here. Okay, so check this out, and I'll finish with this one here. This is why we use trading systems, guys. Listen, it's a small investment. It's a small, you go on our website, We have many different trading systems, and it's a small investment. Right now, I mean, we sell our systems for 5,000 and higher. Right now, you can get a trading system. I don't think we have a trading system that's over $2,000, right? I mean, our monster scalper is very popular. I think that's what, 1,700. Okay, you make that, you know, you guys will make that up in a month of decent trading or less. So it's not like you know, it's not like these systems are costing, you know, 20, 30, 50, 60, $70,000 or 100, $250,000. And the institutions, they pay for that. They pay a lot more than that for their trading systems. Okay. Our sniper trader, it's only $1,199, $1,200. Okay. But for what you get, I mean, it's a big deal. I mean, look at this trade here. PRFT. Here was our buy signal here. Here was our sell signal here, and a break of support we got out here. So we got all these trade here, right? The buyers are in control. This is in the advancing phase, markup phase. Bought here, got out here, took all these profits. Now we can get puts. There was our sales short signal to take it down. We can get puts and now make money to the downside. How easy is that? And I know it sounds easy because that's what I do all the time, but it should be easy. It should be easy. And it should be clear for you guys to see. It's right here. It's right here.
Is it best to use the daily time frame then?
On stocks, I like daily.
Okay.
Yeah, for stocks, I like daily. And I like daily because that's what the institutions trade. They trade on the daily when it comes to stocks, especially. Okay, so they like the end of the day. They like to see that candle at the end of the day to make their decision. Okay. And what I like about stock, because with stocks, guys, you have to understand, it's not like Forex. We could get 100%, 200% return on stocks, on Forex pretty quickly. Okay, because of the volatility. With stocks, you're not going to get that. Okay, you might get 2%, 3% a day. Okay, but it's gradually, we have to hold on to that stock for a long time in order to make any money. Now, with the options, yes, with the options, it's going to be a quicker move. But I like the daily time frame for stocks because you can also build positions. So every time it breaks resistance, that's the reaccumulation phase. So we could have bought here, added here, added to our position here, added to our position here, added to our position here, and then got out here. Okay, so with stocks, we want to keep them, we want to have a longer time frame, the daily time frame, because that's what the institutions trade on. Okay, and guess what? We need to stay in that stock a long time to really get a decent move. Okay, if we trade in the call options, we can trade within the price. We don't have to hold it. All we catching is we just try and get on the trend, and we might stay a week, a couple of weeks if we've got call options on it. Okay, but what I want you guys to really get with this session is that you guys, if you're not using a trading system, you're playing a losing game. If you're not, because all the professional traders, right, the hedge funds, the money management, they all have trading systems. You know, it's not going to be the same. They have different systems, but they're all measuring the same thing. They're measuring a break of resistance and a break of support. Okay, and it might be, they might not call it support and resistance. They might call it price levels. So they have their the same price levels that we see is the same price levels that they see. Okay, so when their system say buy, guess what? Our system will say buy, because we're measuring the same thing. When they're out, when their system say, hey, sell out, our system will say, hey, we're gonna sell, get out, because we all measuring price. And a good book, a book that we use is called Trend Following by Michael Koval. All our traders get this book. Okay, so it's called Trend Following right here. Trend Following by Michael Koval. And all these really good traders use systems like this. So you guys need to use systems. Whether it's our system, you don't have to get our system. You need a system. If you guys are really serious about trading, you have to get an automated trading system to give you an edge. Trying to do this manually, you can do it. You can do it. Okay. And a lot of our traders, like Ricky, started off with our systems. Okay. And then he did it manually. But Ricky is different. Ricky is different, and he's trading full time, and he's a super scalper. Okay. So he's trading full time. He's a super scalper. And, you know,
Does the software tell you what type of risk, like, you know, you don't want to get stopped out if you got your stop loss too far and things like that? Was that something you just have to learn from your own judgment?
Okay, so that's a good question, Raymond. I'll end with that. Okay. Let me show you guys some examples here. So we don't use, you know, as traders, you guys, you know, traders will do whatever they want to do, you know, but the way, I'm trying to find one here. Hold on. We do not use stop losses because the institutions will run your stops. Okay. So here's an example here. So we always want to buy at resistance, sell at support. Okay. Okay. 80 to 90% of your trades, what the institutions are doing is this. Okay, so you have to be very, very careful when you put a stop loss. Okay, so here is resistance right here. Okay, so price broke resistance. Here was our buy signal here. Most of the time, a high percentage of the time, right? The institutions are going to pull, we call it the box, right? So here is your box. So what the institutions are going to do, most traders, guys, okay, they're going to put their stop loss right below that resistance. So right below that resistance line. So here is resistance. Most traders, they do not know what's going on. So they're going to put their stop loss right in this area here. Okay, start looking at price and you guys will see this. So what the institutions will do, they'll push, that's this candle here, that's the institutions getting in. This is not a retail investor. That's a huge candle here. Okay, that's a very big candle. So what the institutions are doing, okay, what they'll do is push price up. So they've got confirmation that they're gonna take it long. They're gonna push price up, take it long. All right. And what they're gonna do is they're gonna bring price back to kick all, because they need liquidity. So they need all those orders filled. They're gonna take all those stop losses. Okay, all these traders that have stop losses in here, because they can see those stop losses, right? So they're gonna push price down, get everyone out. Okay, basically take their capital and then move price back, move price up in the direction that they wanted to take it in the first place. You guys see that?
Yeah.
You guys see that? Okay, so we don't put stop losses, okay? Because guess what? We're gonna get stopped out. So what we do is we only when price breaks what do we sell? Only when price breaks what? Support. So here, price never broke support. Look here. Price did not break support. It came, and they're watching these levels, guys. So they're watching these levels. Price never broke support. It held support. So the sellers never got in. The sellers never got in, but guess what? They got that liquidity they wanted. They got everyone out because everyone had stop losses in this area here. They kicked them out, and then, boy, now they're ready to move the price higher. All right. And then it wasn't until here that price broke support. Here, the sellers got in for real here, and that's when we got out. So we bought here, sold here, made money, and then the sellers came back in. Same thing here, right? We bought here on a break of resistance here. Price went up, price came down. All right, so anybody who had stop losses in this area here, boy, guess what? They got kicked out. Price never broke support. They held it, and then moved price higher. It wasn't until here that price broke support. And guess what? We got out. Here, price broke resistance. Okay, price broke resistance. Price went up, failed. Anyone who had stop losses in here, kicked them out. And guess what? Price broke support this time. This line here is support. We got a sell signal to get out right here. Okay, so Raymond, we don't put stop losses because guess what? They're gonna run our stops and kick us out of that trade. And I know most traders want to put a stop loss, but boy, it's risky. We rather get out on a break of support. If you guys are going to put a stop loss, put it below that support area. Don't put it below resistance. Put it below that support, because you'll know that, hey, at least I'm getting out. I'll get kicked out of the trade when the sellers are in. Okay, the sellers, anytime you between support and resistance, there is no decision. Okay, the buyers are still in control if you've got a buy signal. If it breaks resistance, come back into the box, then the buyers are still in control. The only time we want to get out is when the sellers are in control. Right here, right here, right here, right here. All right. And I know a lot of this information might be new information, or it doesn't make a lot of sense, but that's the way we trade. That's the way we trade.
Makes sense to me.
All right. Any other questions, guys?
Is it a lot when you pay for the product? Is it a certain term, or is it lifetime access? Or
okay, so I'm going to share. All right. Okay, so here is our website here. It's called Monster Trading Systems, monstertradingsystems.com right here. Okay, so make a note of that. If you go all the way down, all the different systems. So the different systems are here. Okay, so for Forex, and there are descriptions on it, Forex, stocks, okay, ETF. So we have different systems here. Okay, it's lifetime. So when you buy the system, it's lifetime upgrades, any changes is included. So it's the only system that we have a subscription on is our Sniper Trader. Okay, and that's because we actually send you the signals. Okay, so with Sniper Trader, at every Friday we send you alerts that stocks that the institutions are buying, and we do calls. So we do calls, but we give you the stocks that the institutions are buying on Friday, and we get out on Monday. All the other systems, once you pay for it, it's yours forever. Okay, so that's your question, right, Raymond?
Yeah.
So go to the website, guys. My information is here, so you can send me you can send me an email, text me, or reach me on Meetup. But I really want you guys to start thinking having an automated process, not a robot. You don't want a trading system that's automatically trading for you. You want to have some discretion in your trading. Okay, you want to have some discretion in your trading. But if you want to if you really want to do this the right way, where you have control of your trades, and basically, most importantly, a control of yourself. It really is about control of yourself, where you're eliminating the emotions. We just want to buy and sell, break of resistance, buy, break of support, sell. And we just want to do that, rinse and repeat, rinse and repeat. We want to do that over and over and over. If you get really good, listen, if you get really, really good, and you think you can do it manually, great. That's great. Most traders can't do it manually. Okay, then guess what? It's a small investment to pay, but at least you'll be on the right side of the trades. Okay, and these systems will get you on the right side of the trades. All right, so I'm gonna end there. I want you guys to really start thinking about that. Do your research, do your due diligence, start thinking about automated trading systems. There's a good book that we give our traders every time they get the system. There are 2 books we give out. Okay, really good books. These are the best books for trading. For the mindset, for traders that do our one-on-one coaching, we give them Trading in the Zone. So look it up. There's you can go on YouTube. There's a free audio, Trading in the Zone. Okay, that is by Mark Douglas. Okay, and it's all about your mindset. You guys need that book. Okay, you really need that. Okay, Trading in the Zone by Mark Douglas. We give this book to our traders whenever they do the one-on-one coaching. Okay, but you can get it on your own. The next book we give is Trend Following by Michael Koval. Okay, so write that down. Trend Following by Michael Koval, C-O-V-E-L. Okay, these traders, these are the top traders in the world, and they all use trading systems, and they follow trends. Okay, those are the only 2 books we recommend. And if it's good enough for the top traders in the world, it's good enough for us. All right, guys. Any questions? No questions?
Can I just have one question? The question is, usually if something's so good to be true, why would you sell it? Just the kind of usual curiosity, because those signals did look really good. I'm not going to lie, they were quite accurate.
Okay, Raymond, you're breaking up. What's that?
I was just saying, if why would you sell something that's sometimes it's like, why would you need to sell it if it can make you as much money as you wanted it to make you, I guess?
Well, why not, huh?
Yeah,
right.
I suppose,
we don't give it away, right? So we still selling it. And guess what? If it can help other traders, other individuals make money, absolutely, right? So, yeah, I trade the systems, but guess what? I want other traders to trade the systems, but we also want to make money selling the systems. We're not giving the systems out. It's, yeah, we make money trading and we make money selling the systems and other things. So yeah. Right? I mean, just like any other business, right? We don't want to keep it, absolutely, we could keep, I mean, there are some traders, when I worked for a day trading firm, a prop firm, they had processes in place and they kept it in-house for the traders. And that, I guess that's a good point, right? If you guys look at the book, Trend Following, a lot of those trend following traders, they don't sell their systems, right? They don't sell their systems. They keep their systems in-house, but they have a different model in that they manage capital. So what they do is they have the investors, and the investors bring in capital. And what they do is they keep their systems in-house, okay? And they manage capital. They just manage the funds, okay? We are set up differently, okay? We don't manage capital. So we give the systems to the traders so that they get to trade like a professional trader, okay? But it's not free. You're paying for it. You're paying for it.
I guess my question is, like, if everybody bought it and everyone became like millionaires, like the system would have to change, wouldn't it? Like, not everyone could do that, because there needs to be a buyer and a seller on both sides.
No, because it's price, right? So in the book Trend Following, Ed Sakota, who is one of the top, he started the whole industry in the 70s, right? And this was back in the 70s, and trading systems are still around. We haven't changed our systems. We've changed the face of our systems, but in 12 years, we haven't changed the algorithm. And that's because price is price. Price is price. It has to break resistance, and it's all we're doing is trading the price. So at some point, price has to break resistance, and at some point, price has to break support. It has to go up and it has to come down. That makes sense? Yeah, it's simple. It's all we're doing is when price breaks resistance, we're gonna get in, and we've designed a system to do that. And then when price breaks support, okay, support is support. Resistance, we can take any, and that's what's cool about it. There's total transparency in price. Okay, there's total transparency in price. Okay, price is price is price. So if we look at the 4-hour chart for USD ZAR on TradeStation, which we have, and we look at it in MetaTrader or any other platform, it's the same price. It's the same price. It's not going to change. It's the same price. And all we're doing is saying, okay, when it breaks resistance, we're gonna buy, we're gonna give, our algorithms are designed to give us a signal, okay, of when to get in and when to get out. And we know that when price breaks resistance, and we can go over them over and over and over, guess what? The buyers are in, we're in the markup phase. Okay, we're in the markup phase, or we're in the advancing phase. When price breaks support, okay, we're in the declining phase, or the markdown phase. Very simple. Very simple. Okay. Any other questions?
One final one. Does it work with, do you have anything for crypto, or is it at the moment just Forex and stocks?
So cryptos, like I showed earlier, right here. So we track only the major cryptos. There's so many cryptos out there, okay, that we only track the majors. So Bitcoin, Ethereum, Litecoin, okay. But as you know, Bitcoin, in particular is a barometer for the other cryptos. So you can chart, you can bring up any of your cryptos and chart it and use the 4 phases also. Okay, you can still use the 4 phases. It's just too many cryptos out there for us to go through. Okay. And we don't have the data for all those different cryptos, but Bitcoin is a good barometer, right? Bitcoin is a really good barometer. If you guys right now, Bitcoin is down. If you look at your whatever platforms you guys look to trade your cryptos, you will notice that a large percentage of those cryptos will be, there might be a few exceptions, but a large percentage will be also down. Okay.
Does that come in the stock product?
What's that?
Does cryptos come under the stock product?
So the cryptos, that's a good question. It's with, let me pull it up here. Hold on 1 second. So the cryptos come with Monster Scalper. So this system here. So this system is Forex and cryptos, Monster Scalper.
Okay, thank you.
Go ahead.
Thank you. Okay.
Okay, perfect. Raymond, if you have any questions, just send me. You found us on Meetup?
Yes.
Okay, so just send me a message if you have any other questions. All right, guys, I'm gonna let you guys go. These are the free books here we offer. Okay, I recommend before you guys get any of the systems, I recommend you do the one-on-one coaching. Okay, I recommend you do the one-on-one coaching. We do 4 sessions, 1 hour per week for 4 weeks. Okay. And our traders really like the coaching. Okay. So you get if we do it through Groupon. Okay. You can do it on the site. Okay. You can do it on the site here. Okay. But if you do it through Groupon, it's $480. Okay. If you do it on Groupon, you get an additional discount. Okay, so you get an additional 50% discount. Okay, on Groupon. Okay, so it's $240. But our traders really like the coaching. Okay, but I always recommend the one-on-one coaching. We go through your mindset. You get the free book, Trading in the Zone. Really focus on your mindset and then kind of help you get some direction as to how to set things up. Okay, there are some testimonials. So if you go right here, there's some testimonials right here from traders. Okay, and our traders really like the one-on-one coaching. Okay, they really like the one-on-one coaching. Okay, like right here, just so you can go through the testimonials. And then go from there. Okay, but we're here to help. We're here to help. All right. Okay, guys, I'm gonna end it now. All right. If you guys have any further questions, you know how to get in touch with me. I hope this was helpful. The biggest thing I want you guys to get out of this is that really start thinking about automating your trades. Okay. You want to think like a professional, and you want to get the tools that professional traders use, okay, to give you an edge. All right. So take care. We have another class. We have classes every evening, different classes. Okay, so come on board and get some good information. Okay, take care. Thanks for staying with us, and have a good night. Okay, guys, great questions. Take care.
Okay, bye.